Even with $1.2 trillion in market value, diamonds have not had their own regulated asset until very recently. Diamond Standard offers the first ever diamond commodity, including tokenized diamond bars and coins. The company just completed a $30 million capital raise, and founder and CEO Cormac Kinney is expanding the, quote, untapped potential of this precious resource. So, number one, thank you for being here. I mean, you brought some party favors. Let's take a look at this right here. I mean, this is what we're talking about right here. And when you're talking about diamonds as a regulated asset, so we all know what diamonds are. We all know that they're valuable. Explain the business that you're launching.
Well, diamonds are interesting because second only to gold, they're the most valuable hard natural resource, worth more than all the silver, platinum, and palladium combined. But they've always been out of reach to investors, because every diamond's a little bit different, and no one knows what their diamonds are worth. So what we solved using computer science is we made a singular spot commodity, a coin and a bar, where every coin is equal. Inside, the diamonds all add up to a public standard, and because they're all equal, they trade at the same price, which enables us to have price discovery, liquidity, and ability to mark to market, which is what an investor needs.
All right, so Cormac, hold those up for a second. So what's the value of each one of these? These are the discs you're talking about here.
These are, we call them the coins. So there's a Diamond Standard coin and bar. We don't set the price. The price, like gold, is set every day by trading. So today, I think the price is $58.80. These are up 30% in the 2 years since we launched them, outperforming gold by over 40%, outperforming the S&P by about 20%. So I like to call it the diamond rush is underway.
Yeah, so talk to us about that rush. Is it predominantly right now institutional investors who are looking for uncorrelated assets, and how are they accessing this? You just mentioned these are tokenized, right? And they're standardized as far as value. How would an investor, first institutional and possibly retail, probably in the not so distant future, access this market?
So the clients now are mostly self-directed investors, hedge funds, and family offices. We're building the depth of liquidity to allow institutional investors, and it'll take a little while. Right now, investors buy direct from diamondstandard.co at the market price, at the spot. And recently, a major breakthrough was we've launched just last week the first spot market where you can buy and sell from peer-to-peer. And giving all of the investors in this product liquidity.
Cormac, I know you have a great history with starting things like this. You've been successful at everything you've done. Here's my question. Is this something that people will take physical delivery of? Is that a potential? Or is this going to trade seemingly the same way gold, palladium, all the things you mentioned trade?
Well, the key was we started at that foundation. This is a good for delivery coin, which is acceptable to CME to settle futures contracts. We have that approval. We haven't launched the contract yet. So far, about 5% of our clients take delivery, where we send this to them wherever they live. Gold bugs, they want to keep it under their bed. That's fine. The vast majority of our clients, though, do keep it at Brinks, where we built a vault in Delaware. And inside the commodity, there's actually a wireless computer chip that stores a blockchain token. So while these sit in Brinks, everyone can trade that token on the spot market for instant regulator-approved settlement.
So, Cormac, you're obviously very bullish on the future of diamonds. Are you bullish because we might be heading into a recession, or is this a long-term play beyond recession? Is this something that you see people holding on to over longer periods of time, even past 2023 or 2024?
Well, commodities generally do very well in periods of recession, and we're definitely in a commodity super cycle where commodities will tend to trade above the moving average for 10, even 20 years. But more importantly, diamonds are only now being unlocked as an asset. So if you look at every precious metal, even palladium, I've never seen a palladium bar. 15% of all the world's palladium is in a vault held by investors. With diamonds, that number is 1% to 2%. So we expect now that we have a spot commodity, liquidity with the market, we have futures and options approved, we've just launched a fund, and we're getting ready to file an exchange-traded product. We think that allows diamonds to catch up with palladium, and that investors will buy 15%. That's a maybe a 5-year secular phase of position building that will drive prices, we think, very substantially.
All right, certainly something to watch. Cormac, before we let you go, I just want you to hold up all these diamonds. You're being a little modest here. There's about $1 million in diamonds right here. I mean, just amazing. And so just roughly, based on today's prices, how much is each one of these coins or bars?
So through the magic of math, the bars are always 10 times the coin. So the coin today, last I looked, was 55,880. So the bars are 58,800.
Developing a new asset class. Cormac Kinney, we appreciate you being here. Thank you.
Thank you, guys.